I said that please wait for 3 minutes. However, that is 6 o'clock, 6 p.m. Japan time, so we would like to start. And therefore, that the panelists, please turn your videos on. Thank you very much, and show your faces to us. Okay, that I think that it is a good time to start a webinar meeting today. For the Japanese companies and climate change, that's the overall the overall theme, and also that the theme is a climate. Does advisory resolution shape the next engagement trend? I would like to introduce to you that company that we do the responsible investment in the ESG, and also that we support the company to move to Japan, and also that the private managed fund or the advisory and the help, and mainly that we have been that ESG advisory and the shareholders that the engagement has been are the target of the business, mainly of the proxy watcher. For the translation, on the bottom, from the interpretation, that you can use the Japanese and English at the bottom of the screen. Please choose the language of preference. If you have any trouble with accessing a translation, please let us know. And toward the end, Harrison may have to leave early, but we would like to have the QA at the end of the discussion. But we can substitute with a chat box, and we'll ask the questions later. And so please feel free to put the panelists in the Q&A and also the chat box. As much as possible, we would like to entertain your questions in the course of the time. After that Zoom survey, that we would like to ask you the questions for the surveys. In May, that we have a similar webinar, and so therefore that we are cordially invited to our May discussion as well. Without any ado, that I would like to introduce the panelist, and I'd like to switch to Mr. Sakon Kuramoto from that law firm, and Ms.Chie that Mitsui from the NRI, and also Mr. Harry Ashman, and also Mr. Will van der Paul. And whenever the panel speaks, please focus on the switch on your video, and please, only when that you speak, that please turn on your videos as well as a voice. So without any further, we will jump into the topic of today. Mr. Kuramoto would like to discuss with you first. So, as I have mentioned, only that the face of Mr. Kuramoto and his voice are put through. Thank you very much. That will I share your slides. The slide is in English, and again, that main theme is about the advisory resolution draft set the trend for the shareholder engagement with the listed companies in Japan in the future. What will be the trend be created by the advisory resolution? And so I have. Could you give us your brief self-introduction, Mr. Kuramoto?
Hello, everyone. My name is Sakon Kuramoto from International Law Office. So I'm in charge of my specialty include my human rights. We're providing support to Japanese companies and others. The topic that is given to me is quite difficult, but considering how we can shape the new trend going forward, I'd like to present my own views, and hopefully we will receive questions so that we can have mutual discussion. Thank you. So let us begin our topic. So advisory resolution has been quite rare format in Japan, but companies can also present advisory resolutions as part of activism overseas. And last year, Palliser actually presented advisory resolution to Keisei Electric Railways, although the company refused to add this agenda to AGM. So let's discuss how we can treat this format. Thank you. So this is Palliser versus Keisei. So I'd like to use this slide. So let's talk about the issue in this case and the future trend, how we can predict the future trend. That is what I like to cover. So can I just use these slides to go on presenting my view? Yes, please go ahead. So let's examine the current status. Let's go back to the very first page. This shows the recent development in recent years. Even in Japan, shareholders advocacy group, asset managers, and NGOs have become shareholders of listed companies. They focus on non-financial aspect, raising issues, which can be referred to as ESG activism. Through this year, there has been anti-ESG activities starting in the United States. But ESG activism is still pretty much very active in Japan, so I think we have to consider how to respond to this trend. The dialogue engagement between listed companies and shareholders is a very important perspective to consider this trend. As you know, the article change proposal, according to Japanese companies law, this article addition require more than 2/3 of majority. This will be a special resolution. So you can make a shareholders proposal, but you have to overcome this major hurdle. For institutional investors and general shareholders, understand that this articles of incorporation is really a constitution for a company. The change in that articles would be very difficult. Like I said, it can be a very high hurdle to overcome. For those who are presenting shareholders' proposals, they will be engaged in, the ordinary engagement, how they can ensure high supporting votes. Now, companies are trying to continue to have friendly relations with shareholders. So recently, we do see some of the resolutions to appoint directors or appoint investigators. The asset of listed companies, state of listed companies' business can be investigated by investigators. And this resolution to appoint investigators can be an ordinary resolution, not a special resolution. So that could be an option for those who are submitting shareholders' proposals. So how should we recognize and understand this as part of the shareholders' proposal trend? So going back to Palliser versus Keisei Railway last year, I just want to introduce this specific case. Some of you might already know this case. On April 24, 2024, Palliser Capital had the shareholding of 1.98% in Keisei. So to Keisei, Palliser submitted the advisory resolution to the board of directors of Keisei with the aim of increasing Keisei's corporate value and improve capital efficiency. So this included the development and publicizing of a capital allocation plan by December 31st, 2024. They asked to develop and publish a capital allocation plan. What it means is, if you could look at number 2, a bullet point there. As you know, Keisei Railway has a stake in OLC, Oriental Land, that runs Disneyland theme park. And Palliser Capital suggested that they should sell and liquidate a part of these shares and improve the capital allocation. So that has been the shareholders' proposal by Palliser. So in the beginning, they presented this advisory resolution. Now, sales of Oriental Land shares was also suggested, and they set the deadline of March 31st of 2026, so that the stakes can be reduced to less than 15%. So that was the submission by Palliser to Keisei BOD. Now, Keisei Board of Directors, on the other hand, responded as follows, as you can see on this slide. The BOD of Keisei responded by refusing to include Palliser advisory resolution as an agenda of AGM. It said that the company will now receive this advisory resolution, but it's not obligated to add that as the agenda of AGM. It is not the obligation on the part of the companies receiving that proposal. So Keisei BOD refused to include this into the agenda of general shareholders meeting, and Palliser expressed the disappointment and decided to use binding resolution to change the articles of incorporation. As I said, this article addition, article change, need to be discussed in shareholders meeting. But on the other hand, you have to acquire more than 2/3 of the vote to pass this resolution. It's a very high hurdle. Major two advisory companies actually recommended voting for this resolution. As a matter of fact, this article's change is very similar to the first advisory resolution. That is to publicize and create a capital allocation plan to improve the corporate value and also for the future basis for future allocation. And secondly, it also asked for reducing the stake of OLC to less than 15% by March 31st, 2026. So these are the articles change proposal. Now, how did Keisei respond? It responded that selling OLC shares, that suggestion is not based on the full understanding of the business characteristics. It's not going to contribute to the improvement of corporate value. So to shareholders, they encouraged other shareholders to vote against the resolution. So what happened at the shareholders meeting? At the shareholders meeting on June 27th, this was rejected. But as a matter of fact, this resolution received close to 30% votes in favor. So what does this mean for the future? What are some of the implications for the future? Now, there has been capital distortion. In other words, if you look at Keisei Railway, as I said earlier, its capital market cap was about 890 billion yen. As opposed to that, OLC's market cap is about 8.2 trillion yen. So it's a very large distortion in terms of capital allocation. Fuji TV in the past, when Horie-san took an action against Fuji TV, Fuji TV was another example that had similar capital distortion. What about the other listed companies in Japan that have a similar distortion there could be many that could be targeted. Now, if you look at Japanese Companies Act, what are some of the difficulties or hurdles? Shareholders' proposals to amend articles of incorporation need to be accepted by the company, but at the same time, you have to get the more than 2/3 votes for the resolution to make that happen. So this Palliser versus Keisei could be used as an example. As you can see, Palliser submission. You could start with submitting advisory resolution and see how the company would respond. And they could say if it's refused, they can resubmit the binding resolution, saying that there's no option but to submit this binding resolution. It's a story that they can talk. It's a special changes, a special resolution to change the articles of incorporation. They can be more convincing, saying that this they were left with no other option. So it's not just a resolution to amend the articles of incorporation. There are other options. For example, they had no option but to present a resolution to change the directors. There was a case in Toshiba. They could say that they had no option but to submit the resolution to appoint investigators, stating that there is clear need for having investigators. This will be easier path for those who would like to make a shareholders proposal. General shareholders, institutional investors can actually take this course, saying that they were left but no option than this. And in this case, all they need is to get more than half, the majority of the vote to pass the resolution. So not just general activists, ESG shareholders can actually learn from this case between Palliser and Keisei. So you could start with advisory resolution. If it's rejected, you could present another resolution to appoint or change directors or investigators. This could be quite a viable strategy. So on the other hand, listed companies, how could they respond? It's a very difficult issue for them. For example, listed companies can contribute to a higher mid to long-term profit. So I think it is necessary for them to start positive engagement with shareholders and activists as well. And to receive guidance by shareholders, they have to offer more than that is submitted or proposed in the mid to long-term strategy. That I think is going to be a very important action for listed companies. That is my observation. Thank you.
Thank you very much. Well, before the summary, that I would like to, we have to summarize simply, and how to, interpret the engagement that you covered to a certain degree, especially the activism. Not only that climate change is a theme of today. Palliser Capital has the transition between the two in last year, that the first advisory resolution is proposed but declined by the company, and therefore the binding resolution in place was proposed. And that was the communication conducted by Palliser. And so that for the first comer to this information, that it is rather compelling Yes, as a story that I think is communicable stories. ESG activism also, probably that's the same story is, well, the applicable. It is my question to you, which, yes, of course, that for ESG shareholders, what kind of the strategies are built and applied that I'm not very sure. But the Palliser's case or the case Keisei trains that the transition or the transaction is the test case for Japan. As you know, the United States, the so-called ESG shareholders, and also that for appointment of the board members, that they propose that as an option of the advisory resolution of appointing the board members, and so that in turn that we can transfer to Japan and based upon the corporate law in Japan, and there are many ways that you can attack, quote unquote, of the company from the one shareholders that the appointment of the directors that the proposal is not proposed too often to Japan, but so that the Palliser case say that the transaction is a test case. So for that, rather than escalating to the amendment, the article incorporation resolution, that you can apply that appointment of the directors, appointment of investors, that you can take this way even in Japan. And that is my guesstimate. Thank you very much. So Harrison and Wilson, that I would like to ask your opinions later on. Mr. Kuramoto sensei, thank you very much for this very specific and very specific cases. And so first, that by interpretation of the Kuramoto sensei, which is an expert of that corporate law, that it is a very excellent foundation for the discussion to follow. So Kuramoto sensei, please follow that. Please come into the discussions later. Mitsui-san, that I would like to call on you for the discussions. So I would like to change the slides. Ms.Chie Mitsui of the Nomura Research Institute. So based upon the discussions, let me digress that the Keisei's case that I was the reporter of the Nippon Keizai Shimbun, and at the boom started of this, and for the OLCs that the share that the market capitalization is too huge for Keisei, that I wrote this article myself, and as the Kuramoto sensei explained in a very easy to understand way, and so this is the very typical case. And based upon the Kuramoto, Mr. Kuramoto's case, and so that how that the institutional investors can counter the advisory resolution into the future. Advisory resolution will be applied probably several times, many times into the future. How that institutional investors have to address that the advisory resolution into the future. So Ms. Mitsui, please. Thank you very much from my side. So that I participated in the webinar one time past. I have been discussing of the climate change and also that the shareholders, the resolutions for that the climate change, which requires the amendment of article of incorporation, and also that was the discussion of the many of shareholders do not support of such kind of a resolution. And today's the proposal of the resolution was different than climate change. For changing element of the article of incorporation, we discussed quite often. So that shareholders' resolutions entailing the amendment of the article of the incorporation, there are several opinions in Japan. Well, so that there are many of the opinions it's not understandable for or against. But the Paribas really the first case, very rare case that to propose in the form of the advisory resolution. It may be proposed in the past, but not adopted. So that for that they in this time the Paribas that wanted to pass this resolution. Well, against or for whether that the advisory resolution change or not, so that I discussed with many of the experts that I would like to disclose. Originally, before this, that amendment changing, article of the incorporation changing that the ESG or the climate change related the resolutions, that there are many opinions. So one thing is that so-called that so not changing of the board members, and therefore that there is the trust that if it is adopted, it will be done, but that there is no binding, legally binding, and also that it won't be accepted because that it is if it is an amendment of article of incorporation is required, and therefore the issue here is that they don't want to change the article of incorporation, but well that it entails that the change of the article of the incorporation. Therefore, that I cannot accept. This is a little distortion here. So not that the amendment of article of incorporation is not sufficient. We have to change that the board members when that climate change is very serious, so that it was a quality issue, and so that for the writing of the article of incorporation itself. Well, it's okay to write in the article of incorporation that it is, if it is very, very important for the company, why not to write into the article of the incorporation? However, that the 2/3 of the support, and therefore they hesitate. So that, well, one half is still that many, but if it is written to the article of incorporation, if the next change is not that was serious, that I can adopt, however, that it is that the special, that the number of the voting is too much, or that the third case here is that the number is great. While speaking to the many of the shareholders, well, you see that the amendment to article of incorporation is too demanding. So in this case, well, so this, if in the case of the advisory resolution, you can at least express the intention. That is a kind of feeling. So that you are in line with that the procedures of that adoption. Well, so that. Well, the comparison is funny, but the advisory resolution, the binding resolution, that do you think that you change your course of the strategy? Well, it depends on the how to propose of the advisory resolution. Advisory resolution aside from the article of incorporation, and therefore that you have to address, and therefore that the contents is very strict, so that I can vote for this. So that was one opinion. But if the contents is exactly the same, the advisory or the binding, well, then that our stance should be the same. That was another opinion of the shareholders, and therefore it is probably the status quo of the the general shareholders meeting. So that. So the shareholders meeting and what is the proposals of the resolution. The concept may change. If not, that you want to be protected by the board members, or that the compilation of the opinion of the shareholders, which is a case that we have to consider. And so far, in this sense, in the feeling, the advisory resolution is soft enough to accept, but really so. That whether they can be adopted, it all depends upon the contents of the resolution. Is it a feeling? Maybe that the specific contents. So, well, can I conclude here? Yes. In that sense, that we would like to discuss in the latter half. Harrison came, particularly in the UK governance code, says 10%. That well, aside from the board members, the opinions that 10% by 6 months, and there is a very, very specific provisions of that advisory resolution, how to address the advisory resolution. Australia and UK in the market, the shareholders are engaged, and these the market that the shareholders are engaged, so that their way of addressing the advisory resolution may be different. We would like to discuss later on.
So next, Harry-san. Let me show the slide. and I will continue to speak in English. Japanese. Sorry. Can you hear me now, Harry? Can you hear me? Yes.
But we also engage and vote on a further €500 billion. So we've got a large focus on sustainable investing integration, but also on engagement. And with that in mind, we engage on and file resolutions quite frequently. So we have quite a lot of experience of environmental, social, and governance resolutions over the past 10 years or so. So I'll be providing a bit of perspective about how different markets use advisory resolutions, and then summarizing with why that may be relevant for Japan this year. So investors tend to see resolutions as an escalation step, obviously, when a company has refused to make progress through normal engagement. In general, at Robeco, we would rather not have to file a resolution. And even when we do, we like to be able to come to an agreement with the company and withdraw that resolution on the condition that the company will take action on the issue in the near term. And we did this last year at an American consumer goods company, where we filed an advisory resolution calling for more action on deforestation, then came to an agreement after a lot of negotiations with the company. So we withdrew the resolution because we would rather see tangible improvement from a company than gamble on other investors' votes, or even risk that a company ignores a resolution even when it gets the majority, which has happened in the US in the past. I think it's important to note the different uses of resolutions in different markets. In the US, they are extremely common. They had about 600 ESG proposals filed by external stakeholders last year, whereas in the UK, Germany, and France combined, we only had 16 advisory resolutions. So 600 versus 16 is quite a large difference, just facilitated there by just different regulations there in the US and different attitudes towards resolutions. It's interesting then that support for those proposals is then the opposite. So European investors average about 82% support for ESG resolutions over the last 4 AGM seasons, whereas in the US it's only 19%. And support is also falling. So in 2021, advisory resolutions were extremely well supported, particularly on climate change as climate action escalated. 21% of resolutions passed in 2021, whereas last year only 1.4% of resolutions passed. So the average of support is also decreasing. So in 2021, resolutions on average received 40% support, whereas last year it was only about 20%. So there are changing attitudes. The world of ESG has been changing. The more difficult environment in the US is certainly a contributor to that. However, I think they're still an extremely useful tool. On environmental and social resolutions in particular, we've seen that the focus has moved from direct requests for targets and strategies towards more indirect topics like transparency and risk assessments. And we don't believe that that is because investors do not want to see targets and strategies. We believe it is to avoid pushback from companies or regulators, because it is quite easy to claim that a request has already been substantially met. For example, many companies have climate change targets, but not enough heavy polluters have ambitious enough approaches that will really see them adapt and thrive or mitigate to transition risks. But simply filing a resolution again and again, asking for better targets, doesn't really get anywhere. So more indirect routes are required to push companies to really assess and disclose issues to investors, who will subsequently demand action, which I believe is why we see these more indirect, less obvious resolutions starting to be filed. It's important then to be aware of that trend, we think, and to really read and assess every resolution ourselves and not rely on either the company's response or the proxy advisors. The management of many companies are not incentivized to think about the risks that ESG issues may pose, beyond the next 3 to 5 years, or even to think about the impacts on just their company. Whereas we as investors need to think broader on the broader economy and our clients rather than just a single company that we're invested in. We've also seen that the proxy advisors sometimes lack that necessary investor perspective to really assess many environmental and social resolutions. They are also vulnerable to political pressure, which is what we're seeing in the US at the moment. To that broader point as well around needing to think beyond just the individual company and what is the impact of a resolution on the broader portfolio. At Robeco, we believe it's our duty to provide the best outcome for our clients across an entire portfolio. So that's particularly how we look at things like climate change and net zero portfolio targets. We think it's also our duty to consider the longer term impacts of our actions. So to ensure that our clients can meet their obligations in the future as well, whether they are pension funds, endowments, or insurance companies. But in Europe, there are many stewardship codes that also emphasize that investors should vote in a manner consistent with them being long in a company, so consistent with them owning a stock, and should vote in a manner consistent with what we believe makes that individual company stronger, regardless of the impacts elsewhere. So there's an interesting contradiction there that many less ambitious investors seem to hide behind. We think it's convenient sometimes to forget the longer term macro impacts and vote purely based on whether a resolution would impact a company's share price in the next 1 or 2 years, and then to sell that company when performance dips in the future. But we don't think that adequately considers the broader longer term impacts of issues like climate change or nature loss, which we believe will increasingly impact everyone's portfolio. It's also important, I think, to remember that advisory resolutions are signals. They are early warnings that an issue is starting to become more important for investors. So support for an issue may fluctuate over the coming years, but issues like climate change, nature loss, diversity, equity, inclusion are not going to disappear in the long run, despite the recent political pressure. So we believe that companies should sit up and take notice when resolutions are filed and receive support. We would consider anything above 20% to be a good level of support and show serious discontent. In the UK, this is also the level that triggers a company having to explain what actions it intends to take, to consult shareholders, to understand the reasons behind the result. So for us, 20% is a very important threshold. We had an example earlier where Keisei Railway saw 30% support for a resolution. So obviously that is a serious signal from investors. And we believe that it's in a company's best interest to really listen to the underlying messages and requests of a resolution. The wording itself can lack nuance. There are word limits, there are phrases you have to include. So it's important to understand exactly what the concerns and expected actions are related to a resolution. So to really understand the underlying factors. It's also then important for a company to listen to the shareholders that supported it to understand their rationale. And failing to allow these resolutions on the ballot, so failing to allow advisory resolutions at the AGM, really deprives management of a very useful tool and a useful mechanism for assessing investor perspectives. So having to analyze and vote on a resolution forces investors to take a position. It forces us to make a decision, and therefore forces us to be able to provide an opinion to the company should they want to get our feedback. So refusing to allow advisory resolutions simply closes off a source of information that could help manage a business better on behalf of shareholders. And there are, of course, consequences for ignoring advisory resolutions. One is that investors continue to push back and that the issue begins to be seen as a governance problem that even more conservative investors are concerned about. There is an Australian oil and gas company who have consistently had say on climate resolutions on a very inadequate transition plan. Opposition to that plan grew from 49% in 2021 to 58% in 2024, simply because the company did not listen to feedback and came back and basically held the same vote without meaningfully improving their approach. Now, that also led to growing concerns over governance, such as director competence and attention to shareholder concerns. So they saw a 16% vote against the chairman in 2024 and will likely see more this year. So it's an example where an advisory resolution was badly handled by the company, and that led to a governance concern and more votes against directors in addition to the resolution itself. The other consequence of ignoring advisory resolutions is that binding resolutions can put companies in a difficult situation. And now this seems to be particularly important with the trends in Japan at the moment. There was an oil major in the UK that had a binding resolution pass in 2019, which means that they have to report on how their strategy and capital allocation are aligned with the goals of the Paris Agreement. This resolution was adopted by management, who at the time were very supportive of the transition. But as the company backtracks on targets and pivots their strategy back to fossil fuels, they have been tied by this resolution, which is in their Articles of Association. So they are now attempting to fulfill their legal obligation to report against a binding resolution, whilst also simultaneously trying to convince other investors that they're moving back to fossil fuels. So they're completely stuck by having a binding resolution in their Articles of Association. And it means that they're really tying themselves in knots, trying to provide two totally opposing messages. And I think it shows that Japanese companies should be grateful for the opportunity provided to have advisory resolutions and wary that if they reject them, binding ones may be submitted instead. So you need to be careful what you wish for. Now, finally, as has already been highlighted by Sakon-san, the Articles of Association are effectively the rules of the game. So how will a company be governed? Does a company really want every disclosure or strategy rule to be written into the Articles of Association? I don't think so. Investors don't really want that either. But if it is the only way to make a company listen to an issue, then that's the only option. And accepting and being responsive to advisory resolutions is really much more efficient for the entire market. However, from where we sit, we do think that perhaps some jurisdictions like Japan could have a better filtering system. So the 5% threshold we have in much of Europe is too high to allow a resolution onto the ballot. And in the US, we can see that the SEC can be politicized. But we do think there are lessons to be learned from both of them. And we believe there must be a way for regulators to ensure that higher quality advisory resolutions make it onto the ballot, because that benefits everybody. In the meantime, we strongly recommend that companies engage with shareholders on advisory resolutions and allow good quality resolutions with genuine concerns onto the ballot, because we think it's just more efficient for everybody in the market. Thank you.
ハリーさん、ありがとうございます。ちょっとハリーさんが7時に行かないといけないということで、一つだけ、このオーディエンスの方から質問いただいているので、ハリーさんにちょっとご質問させていただきます。少しだけ、stick with us a little bit more. 少しだけ、お待ちください。
I would like to question to Harrison. In the United States, advisory resolution in the United States is not supported. The poorly supported. Why? Why in the United States is so popular? Well, is it a good model for Japan if it is so unpopular in the United States? It's a very demanding question, but could you respond? Thank you, Harrison. So most of the Q&A, well, you have to miss most of the Q&A, but please stay with us until that 7 o'clock or 9 o'clock your time with us. So Wilson, yeah, you are on next, but please give us some more moment for the preparation or sharing the screen. Okay, there is opinion of the institutional investors, and 4-5 years in Japan, that in the climate change area, that you have been engaged in Japan for the past 4-5 years in Japan. So especially that there was a discussion with UK that 20% or more of the shareholders go into the different way of the board members. So 20%, 30%. So it was at the headline of the Japan, of the UK, and the United States also. The 20% or more of the general shareholders are in opposition of the board members. So what kind of the request, what kind of the engagement is required in Japan, that what kind of engagement the company have to be prepared for? And also that could you comment on the advisory resolution, whether the Japanese company can be adopting the advisory resolution at least as an idea?
Thank you very much, Ko. Just to introduce myself, for those who don't know, my name is Will van der Pol. I'm the Chief Executive of Market Forces. We are an Australian-based but increasingly Asia-focused not-for-profit advocacy organisation seeking to drive corporate policy and financing policy shifts to align with global climate goals, like meeting the goals of the Paris Agreement and net zero emissions. We have been active in shareholder activism from a climate risk management perspective in Australia for many years now. Most of our 12-year history, we've been filing shareholder proposals and engaging with companies in Australia, but we've also been doing this in other markets, increasingly Japan, at least for the last 5 years. Also have filed shareholder proposals in the US and the UK over the years as well. So I think what I'd really like to speak about today is to address the topic of the webinar as a whole and respond absolutely in the affirmative that advisory resolutions really do help shape engagement trends, and that these trends lead to increasing investor pressure on companies, and that really demonstrates that it is integral for companies that may be the targets of shareholder engagement and potential shareholder proposals, whether they be advisory or binding, as Harry was saying, really dive into the issues that are underlying the shareholders that are filing those proposals, and responding adequately to avoid that escalating pressure that comes after an advisory resolution or some other investor shareholder activism has, I guess, opened up the topic that is at issue. I'd like to demonstrate kind of this process of escalation by giving a few examples from the work that Market Forces and others have done in Australia, and yeah, really showing how advisory proposals have helped shape engagement topics over many years, both in Australia but also in other markets, and obviously most notably in Japan. I will note right from the outset that advisory proposals have their limitations. They are really just one of the tools that investors need to be using in their stewardship of companies, and that a vote in favor or even filing your own shareholder proposal is not enough to generally shift companies far enough and bring them into line with the changes that shareholders are seeking in order to manage their own exposure to things like climate risk within their portfolios. So yeah, Harry has spoken a little bit about the different approaches to shareholder proposals around the world. Each have their intricacies and differences, and none are perfect. But those jurisdictions that allow some mechanism for advisory shareholder proposals really tend to foster greater shareholder democracy, and that leads to improved disclosures from the companies themselves and improved ability for investors to play their role in stewarding those companies and managing their risk exposures. To move to the Australian examples, in Australia, we do have to jump through some hoops to be able to file advisory proposals. So we need to couple an advisory proposal with a special resolution to change a company's constitution. So similar to what is required to change the articles of incorporation in Japan. But filing that proposed change to the constitution allows us to also have on the ballot of an AGM a resolution that would be advisory in nature, meaning that all proxy votes can be cast ahead of an AGM, and the company and all of its investors can see what the votes would have been on that issue. And that is really, it's that process that has enabled market forces and others to foster this strong culture of investor engagement, particularly on climate change, which is our focus, obviously. And it really allows for that, the governance and the risk management issues to be brought to the fore and be brought into the mainstream and discussed at that really high level of investor and company dialogue. One of the examples that I'd like to give relates to some resolutions that we first filed back in 2020, which essentially sought for companies to disclose how they would manage down fossil fuel production in line with net zero by 2050 or Paris Agreement aligned pathway. And rather than aligning or expending capital on fossil fuel growth activities that were inconsistent with those climate goals, how they would instead prioritize returns to shareholders, so financial returns to shareholders. The first time we filed this resolution in 2020, we got about 4% support. Some investors and other commentators thought it was quite radical, and it was not a conversation that very many of them were ready to have. But within a few years, we saw votes on similar proposals at fossil fuel producers reaching up towards 20% support. And perhaps even more importantly than the votes on those advisory resolutions was the shift in the discourse at an investor and company level, where we noticed this conversation about fossil fuel producers prioritizing shareholder returns over production growth becoming more and more mainstream. We saw it through non-ESG activist investors like value activist investors like Snowcap, who filed or ran an activist campaign at Santos in 2023, a company that we'd originally filed one of these managed decline proposals at in 2021. So Santos, a major Australian oil and gas producer. Similarly, at Whitehaven Coal, a major Australian coal producer, had been the target of some of these shareholder proposals over the years as well, then faced an activist campaign run by Bellrock Capital, which was really opposing acquisition growth, so opposing Whitehaven acquiring more coal mines, with a specific ask to instead prioritize shareholder returns rather than expenses on acquisition. And then I think Harry has quite rightly pointed to Woodside as another really important example. Again, a target of some of these shareholder proposals from market forces, but also really significant votes on proposals filed by ACCR, the Australasian Centre for Corporate Responsibility, on climate risk management over the years, as well as votes against the company's climate plans when they've gone up. And that pressure, as Harry mentioned, has escalated from advisory votes into binding votes that, there was a director that had 35% vote against his re-election a few years ago. And I think that there's a lot of discontent amongst shareholders that may find its way into votes against Woodside directors at the upcoming AGM this year as well. The final example from Australia that I would like to give, and this relates very closely to our work in Japan, is Westpac, one of Australia's largest banks. We filed a proposal in 2023, an advisory proposal, the first of this kind, asking the company to provide more disclosure around how it was assessing, and it would be assessing, its high-emitting clients, those clients' own transition plans, to ensure that the bank would not finance companies whose transition plans were not aligned with the climate goals of the Paris Agreement. The first version of this resolution at Westpac got 21% support in 2023. The company did not respond adequately or really at all in its disclosures and policies. And so in 2024, a very similarly worded resolution that we filed increased to 34% support. And that just goes to show the really significant jump in investor pressure that can be felt by companies standing still and not responding to investor discontent. So, you may look at a vote like 21% and say, well, that's not a majority, so the company doesn't have to do anything. That's not the way that it's viewed in the market. If an issue is raised through a shareholder proposal, regardless of the vote, a company really does need to respond to the issues that are raised. And if investors see that company's response as inadequate or non-existent, more and more of them are willing to increase their pressure. And this sort of brings me back to one of my points around advisory proposals being incredibly important at raising these issues and having them, the discussions really elevated. But as I said, they need to be just one of the suite of tools that investors use to drive improvement at companies that they invest in. There needs to be escalation to binding votes, for example, against directors where progress is too slow. And the example of Woodside shows that is an option and needs to be an approach taken by investors where that responsiveness is not good enough. I think it is worth reflecting on that UK Corporate Governance Code, mechanism for more than votes against management of greater than 20% really needing a formal response of how the company will address that. I think that 20% is a little bit, it shouldn't be so black and white that 19.9% doesn't require a response and 20.1% does require a response. I think that companies should be looking at any issue that is being raised through formal shareholder engagement, and whether that is through an advisory or binding proposal. Clearly, it is an issue that must be addressed in some way and understood how other investors feel about the issue and the company's responsiveness. So to just reinforce the point around whether advisory proposals should be accepted by companies in markets whose legal frameworks don't necessarily require them to accept those proposals, companies should really want to and seek out a true reflection of shareholders' wishes and views. So they should be allowing these advisory proposals and ensuring that they do go to a vote, and really facilitating more opportunities for shareholders to raise issues and then have their say on those issues. If they want to be fulfilling their duty of acting in the best interests of those shareholders. I'll leave it there. Thank you.
ありがとうございます。そしたら、じゃあ、早速 Q&A に、移っていきたいなと思います。ウィルさん、ありがとうございました。そしたら、ちょっとハリーさんも行かないといけないと思うんですけれども、最後
Thank
に、
you very
皆
much.
さん
I'd
にち
like
ょ
to
っ
move on
と、顔
to
だ
Q&A
けして
session.
いただければと思います。よろしくお願
So
いし
I
ま
think
す。
Harry need to leave, but can you show your face lastly? Harry, thank you very much. So goodbye to Harry. So if possible, I'd like to go back to other panelists. We've received many questions. So let me pose a question from this Q&A box. We will continue on for about 10 minutes or so. I'm not sure whether we can answer all the questions, but please do continue to give us questions in Q&A box. So first question, from the beginning, it is about advisory resolution. It should be allowed according to the revised regulation. For minor shareholders' rights should be protected. So would there be a possibility to change the regulation? So I'd like to invite Mitsui-san to reflect the wishes of minor shareholders. I think you're referring to general institutional investors who do not have majority share. So we do not have to have a change regulation. They can always submit a shareholders proposal. But shareholders proposal itself by institutional shareholders that has only minority share, I think it is a very promising tool to reflect their wishes. But when it comes to advisory resolution, Harry and Will also emphasize the importance of utilizing this tool. The bigger question here is whether the companies are ready to accept the advisory resolution. Listening to Harry and Will, the articles of incorporation. If you can make an advisory resolution, you don't have to ask for amending the articles. But for non-Japanese investors have different formats than Japanese shareholders. How to run AGM is completely different here. And I think it was Harry who said that if you keep submitting many of those resolutions, the quality of each engagement may deteriorate. This could reduce the opportunities for shareholders to express their opinions. That is the downside of that. Thank you very much. So another question to Chie-san. Let me continue to ask this question to Chie-san. This is non-article amendments proposal. Are there any benefits on the part of companies that accept advisory resolution? As of today, if they receive a shareholders' proposal, that should be the benefits to the companies. I actually said that last time. If there's no proposals made, there is no opportunity for companies to explain their position. And shareholders who are attending AGM would say that they can keep engaging just by participating in AGM. But making shareholders' proposal is completely different in terms of the weight that it carries. It's not just limited number of shareholders. Having company fully explain at AGM is it's a very good opportunity for a company to be accountable and have more shareholders understand their position. I think Harry repeated that. So I am repeating also. I think it is necessary for company to accept the advisory resolution. About 10 years ago, there was resolution to change the company's name. Really poor quality shareholders' proposals were made up until recent years. So companies kept rejecting those shareholders' proposals. That's fine, but I think it's important for company to explain why the company rejected. They could say we've received similar resolutions of so many number, so they would reject. So I think the choice should be given to the company. At any rate, it is important to publicize the discussion. It's very important for company to gain a wider understanding.
I would like to compliment. Well, naturally, some of the proposals are so frivolous and not worthy. Well, you changed the company name, for example. Some of the proposals may be so ridiculous to adopt, but not like this. It is for the increase in the value of the short, long term of the value of the companies that you have to adopt. And whether the company will pass the resolution or not, it's up to the company. Activist fund. Well, so that you see that Harrison said that the resolution is rejected, and therefore that we are compelled to change the status into the resolution which is in need of the amendment, the article of the incorporation. This is a narrative. Was done by the other company, I remember. So that with all these narratives, that I would like that the institutional investors to follow, even though the advisory resolution is denied. Well, that what kind of engagement is done by between the shareholders, and also that the proxy advisors and the company be disclosed to the society. I think yes, indeed, the Harrison's case. Well, for amending the article of information incorporation, that how to amend it, I have to check. I should have checked. But those people that who consider that the amendment is not necessary, that they don't propose, they don't support. And so we really have to deepen the discussions. But what is a shareholders meeting from the first place? That's in my mind. What is a shareholders meeting? What the shareholders should be, and for that, the legal, the capital efficiency, and also that allocation. Well, the discussion of these issues is very, very good, and also not the article of incorporation. So there should be the legal requirement of that binding legal. You really have to adopt. Otherwise, that unless that you send on your board of the members to the board, you cannot let the company take that the way that you want to. So that is a pattern, another pattern of sending the board to the board of members, and then legally that that the proposals have to be adopted. So yes, you really have to be dead serious enough to send the members to the board in order to that ensure the adoption. Yes, there is a case study in Australia of compelling the adoption of the advisory resolution. In the case of the Australia, I would like to come back to this. The next, Kuramoto, Mr. Kuramoto. And so, this is the root cause is the social issues, which is the exercising of the advisory resolution. And so generally that that the board members have to it is discretionary that the decision of the board members, and ultimately that they have denied, and so that it's a frivolous that the proposals, but why is the Japanese corporate law is only different from the Western countries? Yes, that yeah, the Japanese corporate law is in a way is very rigid, rigidly interpreted. And so from the shareholders' point of view, that they propose that the very flexible resolutions and that the leadership have to consider all of this and then have to have the decision, ultimate decision of the board members. But this way is clogged quite often. And so that because that the interpretation is very, very that rigid. Well, so that you propose the advisory resolution and well that they stick to it all the way through. Well, advisory resolution right now is according to corporate law. It doesn't require the company to adopt unless there is the legal case is raised. So this questioner's point of view that you just propose an advisory resolution all the way, you stick to it, and you sue the company at the end, well, for that, neglecting that shareholders' intention. But this is a little unpractical. As a route of escalation, well, that resolution of appointing of the board members, that is more realistic. Or that appointing of the investors or inspectors. These are the more realistic ways. And for the company, that you have to take these into the consideration, not sticking to rigidly to advisory resolution and sue the company at the end. That is a little unpractical. And also that the advisory resolution per se, for the shareholders to propose advisory resolution, for you can approach that outside the board members, the external that board members, that their roles has been increasing, and they are considered to be required to be a stronger position at now. So for that, the management of the company, that the advisory resolution to be adopted by the shareholders, and that's if it is very important, and then that if the shareholders can persuade that the external directors, outside directors, and then there may be that the momentous of adopting at the shareholders meeting. So that the role of the external, that the directors, outside directors, is very important from the point of view engagement. Shareholders and the company's dialogues is important. That importance is unchanged. And what kind of the role the institutional investors have to play the role continues to be important. But this is a tough issue. This is a tough issue, I should admit.
Thank you very much. So I'd like to continue to ask the next question to Kuramoto-san. So I am just reading the next question there. Over 20% support is regarded as low. It depends on individual interpretation, but in Japan, 66.7% is really the very high hurdle to change the articles of incorporation. And this has been the case for the past 5 years. What will be the ideal change that we can foresee? I'd like to ask this question to Chie-san as well. But first, Kuramoto-san. Well, AGM can be interpreted differently, but mid to long-term profit of the company is the goal, and shareholders would make proposals there with that common goal. So a company should be there to respond or accept. So this just discussion should take place, listening to the intentions of shareholders. That will be the ideal AGM. So in that sense, it is not a battleground. It is not a battlefield. the companies absolutely refuse to discuss or accept the resolution. So it's black and white, 0 versus 100%. That is not the expected or assumed nature of AGM, as far as I understand. So the AGMs of Japanese listed companies have changed positively in recent years. So what I'd like to see is the further positive evolution. What kind of AGM are we going to design in the future? How this is going to benefit the listed companies? This is idealistic concept, but I think that's what we should strive for. Thank you very much. If I'm mistaken, please correct me. So UK Corporate Governance Code said 20% for company to explain or disclose the information. So what we strive for is to try to find a little milder result. Yes, exactly. There may be a proposal made. It didn't reach 1/3 or 3/4 or half the support. So how, even though it's below that threshold, how should the company interpret that voting rate? And that result should be reflected in future business plan of the company. We don't need to change corporate governance code. It's up to the will of the company. They can actually willing to make a change. Last question. Well, before I go to the last question, same question to Chie-san. In this way, this has to do with Wilson's question, next question to Will. In the United States, there is a news media reporting the engagement between shareholders and a company, in Japan too. So what we want to see is the positive approach from both sides. Do you think this is possible? Is this going to happen in Japan? Yes. As Mr. Kuramoto said, AGM in the past, as far as I remember, when I was young, it was a confrontation place. But now it is a place for dialogue. This issue of 20% threshold, UK Corporate Governance Code said 20%. If there is a 20% vote against, the company should explain. But UK and Japan, we had resolution to appoint directors, and this has been utilized in both countries. Japan, however, did not really respond if it's only 20% in favor of the resolution. So you have to consider how the society would accept this. So in terms of corporate governance code, I think we should have wider discussion within the framework of corporate governance code in Japan as well. You know, listening to what happened in UK following the case of United Kingdom. This percentage of shareholders has questions about the decision made by the board of directors. Now, in that case, we should expand our discussion and include that discussion into corporate governance code. So beside advisory resolution, you have to consider how to run AGM. That's another question that we need to consider. Thank you very much for giving us a very good summary.
Lastly, Wilson. Yes, Wilson, that you have the actual experience in Japan, so that you please respond to this question. Well, we are discussing the shareholders' proposal is better, or advisory resolution is better, or that we have to adopt that the binding resolution is better. But before this, that the dialogue beforehand is necessary between the institutional investors and the companies. The problem is that we should be the agreement, certain kind of agreement between the institutional investors and the companies before that the advisory resolution or not, so that is there anything that the companies or that the investors do beforehand? Well, that the market outside of the Japan, that the negotiations is done, and at the AGM, that the proposals has been avoided. Well, the problem is avoided during the AGM. I know that you have a lot of experience, but what is that the companies and investors do before?
Yeah, it's a very good question and something that didn't really come through in what we've spoken about so far. So I think it's really important that institutional investors themselves have a very clear framework and process for their engagement with companies and their stewardship of companies that they invest in. So Market Forces has published a report on this very topic around some of the key elements to an effective stewardship and engagement framework that investors should have in place in order to deliver the types of improvements in governance and risk management that they are trying to see from companies that they are engaging with. So some of the key elements you would imagine are being clear about what you are setting the expectations for that engagement. So we have identified this group of companies for engagement on an issue like climate risk management. We expect those companies to have delivered scope 1, 2, and 3 emission reduction targets within the next 1 year. And if they have not, we will escalate to perhaps filing a shareholder proposal. And if not, we may escalate to voting against a director. And if a company is unwilling or unable to change at all, we may consider divestment at some point in the future as well. So having that very clear framework to guide investors' engagements with companies so that the investors are clear about what they're asking for and the companies are clear about what is being asked of them and what they must deliver in order to avoid that escalation. Because, I think Harry said it earlier, and we would 100% reinforce the idea that the best resolution is one that we don't have to file, that we are able to engage with a company and come to an agreement, and we don't need to escalate through the different shareholder activist or shareholder tools at our disposal. So yeah, I think having a framework from the investor side as to what you're trying to achieve through your engagement with the company and being clear about the consequences of a company failing to meet those expectations is what's really required, and the best case outcome that avoids having to get to a resolution at an AGM.
Thank you very much. I think this is a good time to conclude the webinar. Thank you very much for the very elaborate answers. I have some question of questionnaire that we are planning to conduct the similar webinar in May. So that please post your questionnaire. So after closing the Zoom, depending on the device, there may be that time difference. But we would like to conduct a survey of your opinions of today's event. If you are listening to the cell phone, please answer to our questionnaires from this. So in Japanese and English, we would like to post on the YouTube And you can see, you can access the archive of the YouTube of the contents of the discussion in English and Japanese both. So I think that well, the time is almost up, so that we would like to conclude the webinar itself. Please collaborate with us of the survey. If you are listening to by the laptop, the Zoom, after the Zoom, that the questionnaire form comes up. Thank you very much for defining your very busy schedule for discussing the very important topic of the advisory resolution. And the panelists are participating in the many different time zones. Thank you. In May, I hope I will meet you again on the webinar platform. Thank you once again for your participation. Thank you.